markets from global financial shocks. Iranian parliament approves currency redenomination. And OPEC Plus agrees to increase oil output by 137,000 barrels per day. I'm Salma El-Feki and welcome to our Economic Bulletin. We start off with the global news where the International Monetary Fund has revealed that emerging market economies have become more resilient to major global economic shocks thanks to adopting credible inflation targeting, better foreign exchange regimes and strong fiscal guardrails. The fund study showed that since the 2008 financial crisis, stronger economic policy frameworks and more independent central banks have successfully accelerated growth while simultaneously pressuring consumer prices lower, a momentum partly aided by the external conditions like the U.S. zero-interest rate policy. Additionally, the IMF underscored the stabilizing role of deeper domestic capital markets. It warned that significant disparities persist, with smaller, riskier frontier markets struggling to attract investment compared to more established economies like South Africa and Mexico. And moving on to Europe, where Reuters has reported that Germany's unemployment level is expected to fall in the next 2 years as the long-awaited recovery of Europe's biggest economy gathers pace. And according to the new government projections, unemployment will edge down from a 6.3% this year to a 6.2% in 2026, before easing to a 6.0% in 2027. Additionally, the number of unemployed is not expected to fall significantly to an annual average of around 2.8 million until 2027. Britain's government has announced it would seek to streamline the process for home buying under its latest plans to give a boost to the property market. And the government noted that the proposals could cut an average of around 4 weeks off the process, which typically takes 5 months, by requiring the publication of search and survey information before a property is listed, among other changes. It is also highlighted that binding contracts for buyers and sellers might be introduced and the number of failed transactions could be halved. In Asia, government data has shown that Vietnam's economy accelerated in the third quarter, despite a 20% U.S. tariff in force since August the 7th that is slowing Vietnamese exports to the United States, especially of footwear and textiles. The gross domestic product in the Southeast Asian nation rose an 8.23% in July to September period from a year earlier, accelerating from an upwardly revised 8.19% in the second quarter. However, monthly data showed a slowdown, with September exports down 1.7% from August. Shipments to the United States, Vietnam's main market, fell 1.4% compared to August, marking the second consecutive monthly drop. And moving on to Latin America, the Mexican President Claudia Sheinbaum has expressed confidence in her government, noting that it will reach a favorable agreement with the United States and other nations regarding trade and will, in parallel, present developments in a plan to boost local tech.
Estoy segura que llegaremos a un buen acuerdo con Estados Unidos y todas las naciones del mundo con relación a nuestras relaciones comerciales. En las próximas semanas estaremos presentando el prototipo del vehículo eléctrico línea, los avances del taller de diseño de semiconductores y también los proyectos de satélites nacionales y de un vehículo aéreo no tripulado producido 100% en México. Esto es parte de un proyecto ambicioso que presentaremos en las próximas semanas, que le llamamos México, País de Innovación, que incluye el desarrollo del Laboratorio Nacional de Inteligencia Artificial.
The Central Bank of Egypt has reported a 0.6% increase in net international reserves, reaching $49.534 billion in September 2025, up from a $49.251 billion in August. The rise was largely driven by a significant increase in gold holdings, which jumped by a $1.755 billion to hit a $15.843 billion. However, foreign currency assets saw a decline, dropping to $33.649 billion from a $35.122 billion in the previous month. The International Monetary Fund has reported that Egypt's economy is beginning to show early signs of stabilization following a series of bold policy moves, and the IMF Communications Director, Julie Kozak, credited the Egyptian authorities for implementing critical reforms, including unifying the exchange rate and tightening both monetary and fiscal policies. Kozak highlighted a significant decline in annual inflation to 12% in August, and improved investor sentiment and stronger than expected fiscal performance. She also noted a pickup in economic activity, stating economic growth strengthened to 4.4% in the fiscal year 2024-25. Saudi Arabia's Public Investment Fund, the PIF, has mandated banks for its inaugural euro-denominated green dual tranche bond, marking the sovereign wealth fund's second tap of international debt markets in less than a month. The Crédit Agricole, CIB, JP Morgan, and Société Générale have been appointed as joint global coordinators to organize calls with fixed income investors. The bonds will be issued under the Euro Medium Term Note program of GACI, First Investment Company, and guaranteed by nearly $1 trillion wealth fund. This follows the PIF's successful issuance of a $2 billion 10-year dollar-denominated bond on September the 8th, which saw strong investor demand with orders exceeding $7.5 billion. Iran has gained parliamentary approval for a monetary overhaul to remove 4 zeros from its national currency over the next few years to simplify transactions after years of inflation. And the head of the Parliament's Economic Commission, Shamsuddin Hussain, highlighted that the currency remains the rial and changes won't be overnight. He noted that the move will make the rial easier to use in transactions and calculations, adding that high inflation had severely diminished the usefulness of banknotes. And for further analysis, we are joined from London by the political and economic analyst, Mr. Babak Emamian. Welcome, sir, to Qnews. Sir, can you share with us what are the key reasons behind Iran's decision to remove 4 zeros from its national currency, and how does this reflect the current economic conditions?
Well, thank you for your question. The reason why they are doing that, they want to give a better prestige to the Iranian currency. The Iranian currency now is the worst currency in the world, and is the worthless currency in the world. It has devalued in the last 47 years since the beginning of revolution, from 70 riyals to $1 to over 1.3 million riyals.
Wow.
To exactly, that's the word, wow. And just before I continue, one of the things I am amazed, there has been no public reaction, because this is massive poverty in Iran, and I cannot work out the nature of human beings that are subjected to such poverty and pressure, yet there is no public reaction in Iran. In some countries, you get massive reactions, and in some countries like Venezuela also, you get no reaction.
There's been none. Yeah.
No, it's just, I'm baffled by the human nature here.
Okay, what practical effects do you think the redenomination have on everyday transactions for Iranian businesses and consumers?
Well, if you're a manufacturer, if you're a trader, you don't know at what price to buy, at what price to sell, because the currency is constantly devaluing.
Yes.
The reason, please. And the reason you asked me earlier, what is the source of this? The source of the Iran devaluation is mismanagement. It is not the sanctions. A lot of people blame the sanctions.
Okay.
But if you look at the Russian economy, it is under sanctions, and usually sanctions have an impact of between 10 to 15% on the economy. There's a one hit. And we've seen that with the Russian rubles. It's just been devalued by like 10%. But if you look at the Iranian currency, it is continuous. And that's because of mismanagement. And the source of mismanagement...
Sir, may I ask you, in what sense mismanagement? What do you mean by mismanagement?
Mismanagement of the economy.
Okay.
When you don't follow fiscal rules.
All right.
But if you look at most of the religious systems or communist systems, when they take over, the first thing they take over is the central bank. And the first thing they do is start printing money, because they don't believe in economy and fiscal rules. They just print money to their followers. And that's what exactly has happened in Iran. Okay. They have something like 8 million dedicated followers, and they have been given false jobs. By false jobs, I mean jobs who have no definitions, they're not productive, but they are monthly paid. Then there are the religious organizations who are massively get government grants. Then there are the overseas militias. And most expensively is the Iran nuclear program to no end, which these are draining all the income of the country.
Yes.
And that's what happens when they want to pay people. They don't have money, so the central banks just print money.
How might this currency reform impact inflation expectations and the broader monetary policy framework in Iran?
The inflation will not change. The inflation will be there.
Okay.
Also, by now, most people in Iran had known when the currency devaluation happens. Usually it happens on the second term of any presidency. So the central banks would try to...
May I ask why in particular just the second term?
Very good question. Very good question. The reason why, because they want to give the president in his first time some stability.
Okay.
So he could be re-elected again.
Right.
But as there are only two terms limits for president, so usually that's when, mostly in the middle of it. So people were predicting every time, if you look at the charts, it usually happens. But having said that, in the last couple of years, that has gone out of the window. They can't control the currency at all. They have no control over the currency.
Yes.
So that's why they're dropping 4 zeros right now.
And what are the challenges or risks do you foresee? I mean, you would actually see during the transition period as Iran implements this redenomination over the next few years?
It is mostly to cover up the corruption and the mismanagement of the economy. What I can see is when it comes to prices, the prices of goods would go higher again in terms of just redenomination. There is that usual inflation plus the redenomination. On the other hand, I think the wages would be lowered because then they would use the redenomination as lowering the prices. So ordinary people would get hit twice, once by having lower wages and then paying higher prices for goods.
Mr. Imamian, how could this monetary overall influence Iran's international trade and foreign exchange market dynamics?
There is none. There is no respect for Iranian economy. It is not. Nobody trades with them. The only country who buys Iranian oil export is China, and the way the Chinese pay Iranians is through barter or other systems. So right now, Iran is an isolated country and has very little international trade.
Well, in what ways might simplifying the currency calculations benefit the banking sector and the financial institutions within Iran?
Well, most of the private banks in Iran are bankrupt. The reason why they are bankrupt because there was a law in the constitution that the government could not borrow from central bank. So the government had been using private banks to borrow money from central banks. So they would go to the private banks, they borrow money, and then private banks would go to the central bank and borrow money for the government. That was the scheme. But by 2020, that had actually expired because the small banks were in such a state that they could not do this scheme anymore. So then they attacked the stock market. They convinced people the best way would be to go and buy recently privatized public sector companies. They were overvalued, and this way people lost a lot of money. Right now, the ordinary Iranian people hold about $30 billion of gold. Having jewelries and gold is a form of a saving in Iran. Now, the government is trying to tax that somehow to raise revenue through the gold, which are privately held in form of jewelry by the ordinary Iranians.
How might this move affect the foreign investment prospects and economic stability given Iran's overall economic environment? Is this the right timing, do you think, in your opinion?
Well, there is hardly any foreign investment in Iran. And I say this not politically, but actually in terms of pragmatism. Unless there is a regime change and an overhaul of entire political system and economic system, I don't think that anybody would bother or would risk to invest in Iran.
Well, that was from London, the political and economic analyst, Mr. Babak Imamian. Thank you so much, sir, for your insights. And back to our news, where we have the French stocks and the euro fell while France's borrowing costs jumped as the government quit just hours after being appointed, wiping millions of dollars off the stock market and fueling uncertainty over the Eurozone's second largest economy. Paris's $3 trillion CAC 40 index dropped more than 1.5%, making it by far the worst performing index in Europe. Additionally, the euro, which has weathered much of France's political turmoil in the last year, slid to an 0.7% on the day to a $1.1665. Global markets have shown mixed performance across all indices, with European indices tumbling the most after the collapse of the French government. In the US, S&P 500 gained an 0.28%. Nasdaq futures increased an 0.51%, while Dow Jones increased an 0.19%. In Europe, UK's FTSE 100 declined an 0.13%. France's CAC 40 collapsed by 1.28%. In contrast, Germany's DAX edged up to an 0.15%. In Asia, Shanghai Composite rose an 0.52%. Japan's Nikkei jumped 4.75%. Meanwhile, the Hang Seng Index plunged to an 0.67%. OPEC Plus has agreed to raise the oil output from November by 137,000 barrels per day, opting for the same fairly modest monthly increase as in October, amid persistent worries over a looming supply glut. In a statement, the group noted that the move was due to a steady global economic outlook and current healthy market fundamentals. It added the production adjustments may be paused or reversed as market conditions evolve. And oil prices rose by about 1% on Monday after OPEC Plus's planned production increase for November was more modest than expected and tempering some concerns about supply conditions, though a soft outlook for demand is likely to cap near-term gains. Brent crude futures climbed 71 cents, or 1.1%, to a $65.24 a barrel, while the U.S. West Texas Intermediate crude was at a $61.47, up 59 cents, or 1%. And that brings us to the end of our economic bulletin, and here's what we have been covering. The IMF says strong policy frameworks shield emerging markets from global financial shocks. Iranian parliament approves currency redenomination. And OPEC Plus agrees to increase oil output by 137,000 barrels per day. And this concludes our economic bulletin. And don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. And thank you for watching, and stay tuned for more updates on Qnews.